Hello, this is Alexander Nikolov. Let's take a look at the foreign exchange markets. And I'm going to take a look at the euro dollar, GBP USD, USD yen, um, New Zealand dollar against American dollar, and also Aussie, Australian dollar against US dollar. And the overall conclusion from the charts is that the US dollar again starts to display weakness against most of the major world currencies. So let's start with the daily chart of Euro USD. What you can see last week, Euro advanced a bit for most of the week, and then on Friday made a huge move higher. So overall, what we have here is a strong move up from late December. Actually, this is the early January low of this year. So this move up is probably the beginning of another strong move higher, and you can see a clearly corrective move down from early February top to last week's low. So notice how the price is held nicely above the 200-day and 100-day moving averages, which are trading flat. So this is a positive sign, and right now the prices are again above the 21-day moving average. So overall, we have an impulsive move up followed by a correction, and what we can now expect is another move higher to at least 140 level, 140.45 level. So overall, our expectation here is for a stronger market gains of the European currency. The weekly chart also remains positive for European currency here. And going back to the 1 hour chart, to the hourly chart, you can see a nice base here for most of the last week, and it's not a very well defined base here, but then the euro moved above 135.40 level, 40 or 50 level, and then spent some days of consolidating above this level, and eventually it advanced strongly on Friday. So a quite bullish pattern here on the hourly chart, and it tells us that the path of least resistance here is on the upside. Of course, there is a strong resistance here just above 137.20 level, but the price pattern, the internal structure of this advance tells me that more likely the single European currency is going to surpass this level and advance toward the 140.45 level. So let's take a look at the cable, GBP USD daily chart. It's more neutral here, as you can see, kind of a sideways consolidation for the past 6-7 months. This sideways consolidation remains intact. So no definite clues here. The prices remain below the important 163 level and well above the 153.30, 153.50 level. So kind of a sideways consolidation. We are near the top of this range. So one can argue that a short position can be justified here, but considering this strong rally for the past month or so, I would not be so excited in going short here. Probably we need to see some signs of weakness here before committing to the short side, because well, the market is in sideways consolidation, but the current move is higher. So one can also point out that because the current move is on the upside, a breakout may occur. So let's say the US dollar is neutral here, because really this is what we have right now is a sideways consolidation. The chances are bigger that this consolidation will break out on the upside, but for now, still the jury is still out here. Going to the dollar yen chart, this is the only chart where I like the US dollar right now, and there are some signs here that the US dollar has already bottomed out. What is this nice formation here? Probably some kind of a triangle that has developed for the past few months. So if this is indeed a triangle, it is a reversal triangle, and the last move higher from the February low is probably the beginning of a long-term uptrend here. But this is for now just a suggestion, just an assumption. The prices have not confirmed this assumption. To confirm, we need a clear break, a clear penetration of the 84.50 level. And only if this level is penetrated, we'll have an uptrend on the daily chart. Right now, the trend on the daily chart remains slightly on the downside. It's a weak downtrend according to our definition, because the prices are around the still declining 100-day moving average and also below the key level of resistance. This is the 84.50 level. And notice the daily oscillators are now overbought, so a move lower can easily be justified from here. So for the US dollar to continue higher, it needs to penetrate this level of 84.50 level. Until that happens, well, there is a good chance that another leg lower may be seen here. Going to the Aussie chart, this is Australian dollar, USD dollar. Notice this is a very bullish chart here, which means the US dollar is weaker, is getting weaker. The Aussie has advanced nicely for the past several months, and right now there is a consolidation here in the form of a bullish triangle. Notice this pattern. Prices are consolidating above the rising 100-day moving average, 200-day moving average, well above the prior resistance of 0.9377. This level should act as support if it is tested, but so far the prices remain well above this level. So nice looking chart, very bullish here, and what we can expect is another move higher towards probably, let's go to weekly chart, but we are at an all-time high territory, so no definite targets from the past can be derived here. Overall, quite bullish pattern here. And finally, going to the New Zealand chart, New Zealand dollar against the US dollar. Here, the chart is also bullish because the prices are above the rising 100-day and 200-day moving averages, but notice the pattern is not so strong. The prices held above the previous resistance near 0.7415 level, so a case can be made that another leg higher is also due here to be seen, but here I'm not so excited, though the overall message again is for a weaker US dollar. So overall we have chances that the dollar is going to be weak against the New Zealand dollar, against the Australian dollar, against the European currency, the euro. It shows some signs of strength against the Japanese yen, but nothing has been decided yet, and it's kind of a neutral right now against the British pound. So overall, we can expect a dollar weakness in the next few weeks or even a few months from here. So that's all for today. Thanks for joining me, and I'll be talking to you again later.